Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is Dwaine Clarke. I want to thank you for tuning in today. We are joined here today with the fabulous Gena Lofton from Southern California, talk about her success as well as how to become financially free through passive income. Just a little background story of Gena. Gena is the founder of Passive Income Advisors and the host of the Gena Lofton Show. Her company helps high-income professionals achieve financial freedom on only in a few short years with a proven methodology. The Financial Freedom Formula F3, the proprietary methodology, is a step-by-step system which enables anyone to replace their higher tax income with tax-efficient passive income using debt and reducing one's taxes. She has helped thousands of people all over the country using this formula to achieve financial freedom in the same way she has done so, which helped her acquire over 4,000 apartment units, a Hilton resort, assisted living facilities, oil and gas ventures, junior mining, technology, and telecommunications. I'm very pleased and honored to have you on the show today. How are you today, Gena?
I'm wonderful. I'm really looking forward to kind of sharing everything with your audience and getting all of your questions answered.
Absolutely. So we talked a little bit before the last week and just now, just kind of about your background and your history. And I would say it's extremely interesting. I would say compared to both our backgrounds, we're like on the extreme opposite. So it's very interesting. I would love to hear a little bit more if you can share that. And I think that'll be a perfect segue into talking about success and business and money.
Yep. Yeah, so just a little bit about like how I started. I mean, I was kind of the least likely to succeed. I lived in Los Angeles. I still reside in Los Angeles, California, was born, raised here in foster homes, abandoned when I was 2.5 years old and high school dropout. Actually kind of either I was going to be in the streets or dead or in jail, and did go back to school, graduated from high school, got my degree, and always had really good jobs. I mean, worked my way through corporate America, initially at Jet Propulsion Laboratory. Then I went over to Ernst & Young, management consulting, and had a wonderful career there. And, didn't understand a lot about money and how it all worked. And, read that book, Rich Dad, Poor Dad, some years back about, how to get out of the rat race, and just became very, very focused on that goal because I never wanted to be homeless again, right? So I was like, how do I do this? And then I started investing in real estate and bought my first place, which was a piece of land, actually, which was probably the most ridiculous asset to purchase because there's no income that's being produced from it, but I didn't know at the time. And then I bought a house, lived in the house for a while. And since I was on the road, doing management consulting, for Ernst & Young, I rented that house out, which enabled me to save a lot of money. And then I actually, bought some income producing properties. And the whole goal was just to, be able to generate enough passive income in order to replace the income that I was earning from working every single day. So that was the whole goal. And then, I still stayed in corporate America. I had an amazing career with a company you might have heard of called DirecTV. And we actually sold that to AT&T about 2015, so a few years ago. And now I'm when we sold the business to AT&T, I had enough passive income to exceed my expenses. I didn't need a job, so there was no reason for me to continue working. So I just left after the deal and became a shareholder of AT&T because I was a shareholder of DirecTV. And now I help anyone do the same thing by generating passive income. So it's kind of a formula that I created using debt and reducing my taxes and understanding the tax code and hiring a team of professionals that developed a strategy for me to utilize the tax code at the same time that I was working for DirecTV at the time, and being able to maximize my deductions. So I was saving a lot of money as a real estate professional, for example, and that enabled me to have more capital in order to continue to invest, in addition to using debt. I love debt. I mean, if money's been free for 10 years, this is something that's very amazing to me, is that so few people have gotten very wealthy with all of the free money that's been out in the world, in the last 10 years, especially.
And
that's a mouthful. I apologize.
Oh no, absolutely. It's great. And seeing you was just talking about the free money, as kind of that things are changing now with the financial markets. We're kind of seeing that opportunity kind of trying to a little bit drying up a bit. So hopefully people are looking at it and still trying to take advantage of it. And of course, there's other ways to do it. But as far as when you made that transition from working and then going into real estate, was there any things that helped you enable to make it faster, or was more like trial and error, or was there anything that helped kind of close that gap?
Yeah, I mean, a few things. One is I really understand economics, right? I love watching, what's happening, like when markets are really high and it's overpriced for the area. And I kind of buy things when they're very cheap, right? So I study markets and I study asset classes for a lot. The other thing I do is I partner with other companies that do what it is that I do. So I have 4,000 units, right? Apartment units and assisted living facilities and oil and gas operating interests. So obviously I'm not an expert in all of those asset classes by any stretch of the imagination. So what I do is I find people who do what it is that I want to do, and I partner with them. So think of it as like, maybe I call it kind of the LeBron James methodology. Like if you like that basketball player and he's your favorite, find whomever is the best in whatever that asset class is that you want to focus on, and go ask them if you can join the team, right? And invest with them. And so that's basically what enabled me to grow very quickly. Is once I was out of opportunities in Southern California, because I buy when it's very cheap, and that was when the market crashed, when the financial collapse happened. A few years after the financial collapse, I started buying, and then I was kind of priced out, and then I found my partner, and he does what it is that I do, and then I went and started investing with him, and that's how I was able to grow so rapidly. Now, I do recommend, though, you can't invest with just anyone. I mean, there's a lot of operators and syndicators that are out there that people really need to do their due diligence and make sure that they, are selecting the right partners, and not because you can lose money. I mean, very easily. I have made mistakes. I mean, I'm sure we all have, and I may make more mistakes, but the key is to really do your due diligence in selecting the partner that actually is doing what you want them to do. And ideally, you want that person to not need your money. At least that's my rule.
As far as was your first deal, was it in apartments, or I know you said besides from your own personal ones, the one that you partner on with someone else?
Yeah, my first deal was in apartments. Yeah, I started buying really small apartment complexes, anywhere from 2 units to 8 units here in an area called Inglewood, California. I really liked Inglewood, California, which you probably hear about a lot today because they're building that new NFL stadium for the Los Angeles Rams, and I guess the San Diego Chargers are moving there as well. But yeah, here in Southern California, you know, the price per unit at that time was probably $50,000 to $100,000 a door. You know, now you're talking about, you know, $400,000 or $500,000 a door.
Wow.
Right? Yeah. It's very, very expensive. So I focused on small apartment buildings that I can add value to, and that's my forte. That's just what my investment philosophy is, to do value-added real estate. So I would take a building and I would rehab it and make it worth more by putting in higher-paying tenants, basically, and fixing the management problems. Then I would go back to the bank and do what's called a cash-out refinance. So essentially, I like to call it printing money legally, using debt. So once the property value is improved, I could then go back to the bank and get all my money back and then repeat the process. Because remember, I had no money, right? And so the only way that it's just kind of real simple, Dwaine. It's like this, okay? If you need 100, literally, it was like back of the envelope. If I needed $100,000 a year in passive income, I needed $1 million earning 10%, right? I mean, this was as simple as my math was, and still is today. I really advocate, be very simple, right? Just figure out what it is that you need every month, and then determine how you're going to get there. So for me, it was $100,000 a year. So I needed $1 million earning 10%. So I had a few problems, right? I didn't have any money, and there were very few opportunities earning 10%. So my logic, because I'm not real smart, was just the only way that I can do this is to, one, reduce my largest expenditure, which at that time were taxes, right? I was paying a lot of taxes and earned income as an executive at DirecTV. And so I had to reduce that expenditure, and then I had to use debt. So I had to basically get that $1 million by using the bank's money over and over again. And kind of it's what I call like the velocity of money. So think of it like, if I send $1 out in the morning, I want it to come back by noon with friends. And, so it's how frequent can it come back, and how many friends does it come back with? And I want the friends to stay in the house and send the other $1 back out after lunch, and it to come back again at dinner with friends. And then that's kind of the way that I keep the building. I get my money back, and I go back and I put it to work again. And I consistently do that. And I advise everyone to do that. I mean, because, if you think about it, the debt of the United States when Obama was in office was $10 trillion. By the time Trump got in, it was $20 trillion. Now, Trump has got to go from 20 to 40 in half the time just to pay the debt. So if your balance sheet, if your wealth did not grow proportionately to the debt of the country, and the whole world has gotten wealth, has printed money, then by default, you're losing money. Right?
Exactly.
Many people don't understand that. Like it's, which is sad, that you have to be able to keep up with the debt of the country, because otherwise you're losing your purchasing power, right? Your wealth is eroding. I know that's a lot.
No, like so you get into real deep, and it's kind of covered a lot of different topics, which is beautiful. So, it's like we just went over kind of your transition from getting in from corporate America to full-time investor, entrepreneur. And as far as like besides from Inglewood and the different parts of California, is there other markets that you're invested in, as far as like other asset classes and stuff? Like where's those markets, and are you seeing any opportunities in markets that you could suggest or at least take a look at?
Yeah, so I'm in Texas, Arizona, and I was in Oklahoma. We just sold a building in Oklahoma. I still like all of those markets. I'm not selling anything any longer. I'm not buying anything right now either, though. I mean, I don't, in the markets that I'm in, the opportunities for value-added real estate are not there. And for a few reasons. One is, cap rates are very low, right? They're very compressed. So it's very difficult, and which means the values are very high, right? That's basically how it works. So when values are very high, your cap rates are very low. So therefore, for me to buy and do a value-added project, it's very difficult to do it with that characteristic. The other characteristic, which is very difficult to do value-added real estate, is when you have inflationary pressures, right? Your costs are rising. So, construction costs, your material costs, labor costs, all of that is rising. And you have incomes that are kind of, let's say your ability to raise rents are it's difficult, right?
Yeah, exactly. Yeah.
Yeah. So, so because of all of these factors combined, doing value-added real estate in my markets are, it's like finding a needle in a haystack. Do they exist? Absolutely. I'm sure they do. There's always a deal that's out there, but, is it worth my time? Right?
Yeah, exactly. Yeah, I'm seeing it a lot too in the net lease space with the cap rates, and a lot of investors are being very cautionary, especially like with using the debt with it. Of course, like say you can try to use other people's money for that, but it's like I said with the pricing and but they kind of like it because of the long term, and the tenant is kind of taking care of all of that stuff, and they have the built-in stuff. But now the tenants are now being cautious to go and sign these long-term leases and kind of structure the deals. So I see it a lot. Like I said, I definitely see what you're talking about there.
Yeah.
As far as like your model, Rich, it's very plain and easy to understand in regards to the high income and the taxation there, as far as getting into the passive income. As far as the traditional way where people will get their money and then put into stock market, stocks and bonds, and you're all about putting into cash flowing assets. Can you talk about the two, and then kind of like, I know where you're leading into, but kind of, dive a little bit deeper into that.
Yeah, no, very good question. So let's talk about that, because there's two types of investors, right? Two methods of investing. Most people buy something and then they expect to sell it later for a higher price. So that's how you invest in the stock market, right? And other people like myself, I actually prefer to buy something for cash flow or passive income. So that is like maybe a dividend paying stock. AT&T is a very good example, right? So I own a lot of AT&T stock, and it's a 6% dividend a day. It just produces cash flow. Oil and gas investments, it just, I make investments into operating oil and gas wells as another example. These, not buying an ExxonMobil stock, I'm talking about, operating wells. And so there's tax advantages for these types of investments. And as let's just say, a person who makes earned income that you work for, right? You're getting a W-2 or maybe a 1099 C, doctors, attorneys, lawyers, you're paying, in the state of California or Connecticut or New York, you could be paying upwards of, let's just say, 50% in tax.
Yeah.
Federal, state, local, Social Security, Obamacare, et cetera, et cetera, et cetera. So it would make more sense for people to invest in assets. I call them PIGs, passive income generators, that are going to give them the tax efficiency, right, that's necessary for them to get that tax rate down, in addition to replacing their higher taxed income, right? So once you begin to understand how you're earning your income, people earn income in many different ways, right? They may work for money, and then they have a job and they're get paid from their job, or maybe they do independent consulting, or maybe they own some real estate and it's passive income. But let's just say real estate, for example, you have what's called depreciation, right? So that you may make $100,000 a year, but for tax purposes, you may be losing $30,000 a year, right? So that $30,000 a year of losses, it's not really losses, it's depreciation, expenses, interest deductions, et cetera, you can offset your active income. And I, consult with your CPAs. I am not an accountant. I think everyone should, have a really good team of advisors and consult with their advisors. But this is basically what, the tax code is written for all of us to take advantage of these incentives in order for us to reduce our taxes. And once you understand that, and you understand that, when you invest, the government wants us to invest in the country, right? And that's why they make these incentives. So whether it's investing in real estate or operating oil and, they want us to invest in oil and gas. There's something that's called depletion credits in oil and gas that works pretty much similar to depreciation for tax purposes. So same thing, it's called a depletion credit because when you're pumping an oil well, the oil is being consumed, so it's depleting, right? Eventually it'll be empty, right, one day. So it's called a depletion credit. So you're getting depletion credits, which works like depreciation. So for tax purposes, you're actually earning less. So there's all sorts of different investment vehicles that are for anyone to invest in that are more tax efficient than, let's just say, in the stock market, for example, buying, Coca-Cola or ABC stock and then selling it for more money later. First of all, you're paying capital gains tax on that, right? So then you have to understand what's your goal, right? What is your goal? I mean, I do stock market investing and buy low and sell high, and there's nothing wrong with that. But my goal is to always generate tax efficient passive income. And I understand the which types of investments are going to give me that highest rate of return and pay the least amount in taxes. I mean, the government just passed a major tax reform, 2 years ago? And there's so many amazing, let's just say, tax efficient investment vehicles. Opportunity zones is one. I don't know if you've heard a lot about that, but where you can basically take the capital gains from the sale of any asset class and invest in opportunity zones that have been designated by the government, the state governments of all of the states across the country. And then you don't pay, or you defer the taxes on that gain that you had for the money that you put into the opportunity zone. So anyway, I know that's a lot, but you have to understand exactly what asset class you're investing in and how that is going to enable you to achieve your goal, right?
Yeah, it's very important because now, like, you kind of turn on the TV and see people doing reverse mortgages and kind of relying on their financial advisor to kind of diversify their stocks and their bonds and stuff like that, kind of waiting for that retirement age and thinking that they're going to be okay. But they really should be focusing on, what are your lifestyle expenses and, what is the money that you really need, like your example of, $1 million, 100,000 a year, and really focusing on finding those passive investments that work for them. So that kind of transition is, say, if you are a doctor, you want to kind of take that leap, you should be taking part of, or find out what that number of that you need per year or per month, and then find assets that fit that model. Or
yeah, absolutely. I mean, it's really that simple. I mean, add up all of your expenses, right? I call it your freedom number. How much do you need every single month in order to survive, right? And if you were to lose your job today, or your client base today, how much do you need in order to continue to survive in your same standard of living, right? I don't want people to, neglect whatever standard, I'm at my beach house here in San Diego. I mean, my standard of living should not change. I'm not going to, go from a Mercedes to a Yugo or whatever. I want the same standard of living. So if that's $10,000 a month, $20,000 a month, $50,000 a month. It really doesn't matter what it is. So few people, ironically, know what that number is, right? If you don't know what that number is, go to genalofton.com, go to my website, and that's the first step. It's free.
Mm-hmm.
It's a spreadsheet that's there. Excuse me. And you can figure out what that number is, right, with the tool. And then once you identify what your number is, then begin to invest in opportunities, generate that number. And there's so many ways in which you can generate passive income, right? Real estate is just one vehicle. It's just a type of vehicle. It's like a Mercedes. There's Toyotas that are out there. There's Lexus, there's Hondas, et cetera, et cetera, et cetera. So that's just one vehicle. You can generate your number in real estate. You could generate it in dividend paying stocks. You could generate it in royalties, right? You could generate it in business income, ATM machines. You can earn interest, right? Interest, lending people money. There's so many ways. You could do, Airbnb, right? Rent out your garage and on Airbnb or parking spot, or there's endless ways to generate and increase one's income. I mean, yeah, it's not difficult. This is not rocket science. It's just so few. We weren't taught this in school. We were taught to go to school, get a job, and then you work until you're 65 or 70 and hope that you have enough money to live your life comfortably for the rest of your life. So the reason why people are taking reverse mortgages is because they followed that rule, right?
Yeah,
they followed those steps. Those are really horrible things to do. You should, first of all, saving money, getting out of debt. I mean, there's good debt and there's bad debt. I love debt. I have millions and millions of dollars in debt, right? And if you follow those rules, you will not be able to ever stop working, right? If you do not, Warren Buffett, he says it this way: if you don't know how to earn in your sleep, you shall work until you die. Right? That's, and I want your audience to really hear and understand that statement. If you don't learn to earn in your sleep, you shall work until you die.
That's true. That's true.
So I'm all about earning money in my sleep, right? I should not. And that's the other thing. People sometimes make investments and then they realize they're really invested in a job. I want my investment I don't want to have to I'm not looking to go and stop one job to get another job, right? Dividend paying income, like we built the asset called DirecTV, and it just generates dividend income. My real estate, I have 4,000 doors. These are teams of people, right? I employ people that are managing those buildings. So it's not, that's why the government gives us incentives, because we're providing, entrepreneurs and capitalists are providing the jobs that are necessary for the people of the country, right? I know capitalism is getting such a bad name. A lot of people are moving towards this socialist policies. It's very scary here in the United States. And I'm a capitalist. I believe capitalism. I am I love capitalism. I love, entrepreneurism and solving a problem, right? Businesses solve problems. Capitalists solve problems. They employ people. They are giving of their time. They're training people. They're hiring the people. They're taking the risk, right?
Yeah.
I mean, this is our money, my money that I'm investing in areas of this country in order to provide housing for the people, right? And by doing that, I'm actually making the world a better place at the end of the day. So there's tax incentives for me and everyone to do that. Why not do that? Why not do what the government wants us to do? So I, just partner with the government and earn income that way versus doing it how you were taught to do it. And that's the problem with the school system, is that they only know that way. They only know to teach you to go to school, get a job. Well, first of all, there's nothing wrong with that, but understand that a job has the highest tax of any income, right? And they don't teach you any of this in school. I mean, I have an MBA and I didn't get this, right? But the school system can't teach what it doesn't know.
Mm-hmm.
So, which is unfortunate, you're going to have to get it outside of the school system from people listening to shows like yours, right?
Mm-hmm.
Shows like mine and other resources that are not your mainstream educational sources.
Yeah, like I said, it's very unfortunate, and it's like this. For me, I listen to a lot of audiobooks, and when I got out of school, I just kind of engulfed into information and kind of hung around people that were doing it, and then you just kind of like get that bug, and then you start to kind of learn and engulf it, and eventually you implement it. And like I said, it's something that you definitely don't learn in school. For the different aspects that you said you can get in, like Airbnb and different type of stuff, we do a lot of syndication deals. Could you give some advice for some of the investors to looking at those types of deals, some pitfalls to avoid, and just to make sure that they're safe and it's, see if there's any good opportunities there?
Yeah, so a syndication, basically, for your audience that doesn't know what it is, it's basically investing with someone, an operator or a syndicator. I'm using those terms interchangeably, in their deal, basically. So one, you want to make sure that is an opportunity that you want to be in. You want to do the due diligence on the market, the operator / syndicator. Make sure that it's going to achieve the objectives that you're looking for as far as return requirements. I like to invest with syndicators or operators who don't necessarily need my money, meaning that they're out of the rat race. They have already achieved financial freedom for themselves. I also look at the legal documents with my attorney and areas of like capital calls, right? So for example, if the project has a cost overrun and they need additional dollars to bring that business plan into fruition, let's just say construction costs, there's construction overruns, where do they actually go and get the money from, right? And it's called a capital call. So I'm really interested in how the capital call terms are structured. I want that syndicator or operator to have money invested in the deal as well. I mean, are they putting their capital into the deal? So these are just really, really high level criteria. Once I get through that process, then I will look at the SEC's website. I will begin making sure that they don't have any violations against them, any fraud, even hiring a third-party company to do a background check on them. And so by the time you go through all of this, there's not a whole lot of operators that you're going to really do business with. So, so those are some, obviously it's not totally exhaustive. It's probably, a lot of other areas that you want to look at. And then there's a lot of different websites that are out there now that are doing this crowdfunding. Yeah, and you probably have seen them, and I don't want to mention any names, but they basically, operators will go to these websites and they'll put their deals on there, and that they'll raise the capital. Just think of it like a stock exchange, basically. And so they'll put their deals out there and people can invest in them. I don't invest that way. I have never done it that way. I usually only do it with the operators that I know. And I don't have very many. I mean, there's, like I said, it's only a handful of operators that I invest with.
As far as, I know, like we talked about kind of people starting out and getting these type of deals. Are there any additional advice that you give for people kind of starting out and then kind of, elaborating a little bit on that?
Yeah, find out what asset class what do you like doing, right? What interests you? And then start with that and find someone who does whatever it is that you like doing and go and talk to them, become an apprentice. I used to want to be a builder. Like I wanted to build big buildings. And literally I went and worked for free for a builder. And I figured out quite, quickly that I don't want to build. I don't have the balls to build. So I'd rather buy something.
A lot of work. Yeah.
Yeah, exactly. But it made me realize what I don't want to do too. Right. So for anyone that's out there and you don't know what it, kind of experiment with a few things. Don't put so much into an opportunity, and that is going to, if you lose it, your whole life is going to just be upset by it, right? So I also say, do things with caution. And the earlier that you start, because you're going to make mistakes. All of us make mistakes, but you want to make sure that your mistakes are minimal. You want to try to learn from other people's mistakes, right? As to what works and what doesn't work. And that's why I say, find those people, companies that do whatever it is that you like doing, whatever that asset class is. I mean, if you're a songwriter, you can make money off of royalties. Some people might like intellectual property. There's, IP is a huge area today, and you can go and buy songs, or if you write songs, you can sell those on so many different websites, right? There's so many different avenues in which to generate passive income. The key is finding what you're passionate about. I'm passionate about real estate. I'm also passionate about helping as many people find their way to get out of the rat race, right? To become financially independent, because I was impacted in my childhood by my parents' inability to provide for their family. So that was my passion. So find what you're passionate about, because then it's not a job, right? You're not working for it, and you're just doing it, and then you earn money by doing it, right? It's that easy. So that's my advice, is just find out what you're passionate about doing, and then finding someone else who does that or something similar to it, and learning from them, even being an apprentice.
Yeah, some very good advice. So besides from, like I said, working and then kind of getting your hands dirty into stuff, is there any kind of motivational books that you have read, or things that you can recommend to the guests to kind of look at too?
Yeah. I love Robert Kiyosaki's books, right? All of them, from Rich Dad Poor Dad to the Cash Flow Quadrant, which basically is, the different types of income. My book, Escape the Madness, The 10 Steps to Get Out of the Rat Race, is also a good book. And Tax-Free Wealth by Tom Wheelwright. He's my CPA, and that is an amazing book. If you don't understand taxes, or if you don't have a good CPA, make sure that they read that book, Tax-Free Wealth by Tom Wheelwright, because that and the Cash Flow Quadrant really opened my eye to, I didn't have anyone, a parent or a mentor teach me. I had to literally go out and find I came out of Ernst & Young, which is one of the biggest CPA firms in the world, the biggest, and I didn't understand taxes. So tax-free, and we all need to understand taxes, right? I cannot stress that enough, and it's complicated. And I don't, I'm not an expert in taxes, but I do understand how different income is taxed. So.
Yeah, especially if you're trying to implement this strategy to, getting the maximum amount of, income back to you passively. You got to kind of understand the opposite side of how everything affects you to direct your money the right way.
Yeah, exactly. And also to remember, any business is a team sport, right? Everyone should have advisors that are giving them good advice, whether that's your CPA, your attorney, your property manager, your business partners, your strategist. Everything I do, I am really connected. I mean, me and my CPA are intimately connected. right? Like a spouse. So make sure that you have a really good team around you. And I've learned, I mean, there many years I didn't have a good team, right? I didn't have, you can't H&R Block or those CPAs, like those, they're not that sophisticated. Yeah, exactly. A lot of people think you could do things yourself, or they're those, do-it-yourselfers. I'm not a do-it-yourselfer. I find, experts in their specific fields that have done it and have succeeded and can help me to build more wealth for myself. So find the experts and let them, help you to get where you're trying to go.
Yeah, that's some great advice. I really appreciate that. So besides from your work, I know you're at your beach house and you're going to go to the beach. Besides from walking on the beach, what else things that you like to do? Is it charity, family, travel? What else do you like to do?
All the above. I travel a lot. I was in China, Australia. I'm going to Cuba.
Wow.
I, spend time here in Mission Beach down at our beach house. And I travel. I love going to the movies and riding my bike and exercising. As a matter of fact, that's what I was on my way to do.
Before we interrupted you.
Exactly. But I'll just get a later start this morning. But yeah, I love exercising and being outdoors. And, our weather here is just phenomenal. I'm 2 blocks from the beach, and they have all these like little scooters now out here. I don't know. They have them in Connecticut where you could just, get on them and get off. And I think they're owned by Lyft or Uber, or both companies have different ones. And so I go out there on scooters and ride the bike and just, enjoy the sunny days. That's what the beauty of financial freedom allows you to do, right? Is to
do more of that,
to live whatever life that you want. And also Dwaine, I really want to stress this is for the women that are out there, or men, it allows you not to have to compromise your integrity, right? When you have enough passive income, you're not going to put yourself into compromising situations just for money.
Yeah, absolutely.
That's a amazing feeling. I mean, I really, really urge everyone, and it's not about quitting your job. I mean, I stayed working. I loved what I did. And many other people did too. I mean, the NFL Sunday Ticket was my product, all that DirecTV stuff. It was great. It was fast. It was
But
fast.
You won't be able to be stressed out while you're working there. It's not like that feeling like, you got to do this, that you're set,
Exactly. And I'm able to make very good, give very good advice as to what we should be doing or should not be doing, and not fearful of backlash.
Yeah.
Right.
Yeah.
So that was the other beautiful thing that enabled me to do. And that's very valuable for people, or even companies and businesses that have employees. Really allow them to have these other, DirecTV was, they always knew I had other interests. I mean, I was, I was an investor and I did this other thing. I mean, I'm putting DirecTV in my building. So it was, there was never any confusion around it. And a lot of companies today, or business owners, don't like their employees actually having outside interests, right? Well, I really am an advocate of allowing people to be who they are and understanding how money is made, because I want them to eventually build their own business, right? Yeah. And then it makes them a much better, they understand the income statements, the balance sheets, the financials of a company, because they have their own companies, and they are going to give very sound advice as to how I could continue to grow, right? My business and my revenue. And instead of just, a lot of people just get into corporate America, just, have jobs and they just, repeat whatever is the latest thing. And they are, not doing the right things for that particular company.
Yeah, that's it's so true, and we just need to get more of this advice out there. And one thing that I find interesting about you is that it seems like you love telling this, helping people, and I think really the big part of it. If we can spread these types of messages and communicate how to get financially free, I think overall as a society and as a world, we're going to get better, and everybody just moves up. So I
Yeah.
want to appreciate you, giving that advice again, and any parting words for our audience?
Yeah, just one final parting word is that money is still relatively cheap. It probably is going to stay that way. So if you have not gotten wealthy with free money, what are you waiting for? And I advise you to begin doing it quickly before it's not free anymore.
Mm-hmm. So what is your, well, how do we get in contact with? I know you have a website and stuff like that. And I know you have a book out that's on Amazon and other different outlets as well.
Correct. Yep. People could get a hold of me at genalofton.com. That's Gena Lofton. My book is on Amazon. It's called Escape the Madness, the 10 Steps to Get Out of the Rat Race. I have a lot of that on my website for free. I have a course, which is the Financial Freedom Formula online course. All of this is on my website. So just go to genalofton.com.
Perfect. All right. We'll have that in the show links. I'm going to send that out to the audience as well. I want to thank you again so much. It was great talking to you and great getting to know you. And I hope to continue. And hopefully when you come to our side here in Connecticut, I could take you out to a coffee and tea, and then we get to continue our conversation even further.
I will hold you to that, and I look forward to doing it.
All right. Thank you, and talk to you soon. Take care.
All right. Thanks. Bye-bye.
All right, bye-bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.